All right, so we understand the importance of artificial intelligence, right? We understand that it's going to have a huge impact when it comes to how we gather information, when it comes to technology. We know that going forward, like in the future, we're going to be using AI daily. Like that's usually the goal, right? And these companies know that as well, right? You have Google, Microsoft, Amazon, Tesla, a variety of different companies that are trying to be the first company to put out to develop products and services that they can put out in front of us that we can consume, right? Because obviously they want to make the money. But the problem with this is that obviously these are not, in order to get in front of like AI technology, you need chips, right? You need to develop chips, and obviously many of these companies aren't chip manufacturers, right? Yeah, Google's a search engine, right? Amazon is retail. You got Tesla, they deal with cars, but they're all trying to become like artificial intelligence AI companies, but they just don't have the ability to make chips, right? So that's where partnerships come in, right? They need to partner with other companies that develop these chips, like semiconductor companies like Broadcom and Qualcomm, right? That actually manufacture chips. So they need to work with these companies. But because of the demand in AI, artificial intelligence, the cost of these chips have gone up. Right, and obviously these semiconductor companies are saying, all right, because there's so much demand, we have to drive up the prices. The problem is that a lot of these companies like Google are complaining like, all right, the cost of these chips are too much, right? They're too high. So what they're doing is they've been threatening companies like Qualcomm and Broadcom, saying that we're going to develop our own chips and create our own design. And because of that, you have companies like Broadcom, I think Qualcomm, their stocks drop, right, with a threat because companies like Google and Apple were threatening, saying they were going to bring the chip manufacturers in-house. Now that's obviously a threat because, like I said, Google is not a chip manufacturing company, right? They're a search engine. So, but when you hear these things, if you're an investor, you hear something like that, you're like, all right, do I want to invest in companies like Broadcom and Qualcomm if companies like Google are going to be creating their own chips? But what I think what people are noticing is that obviously the stock of Broadcom and them went back up, and I think investors started realizing that, you know what, you're a search engine. You don't make chips. It's not something that you do, and you got to understand that. Like if you're someone that's in the business, right? If I have a business, right, and let's say I have a sales marketing team, like it wouldn't make sense for me to be all in sales and all in marketing and try to do all these different jobs. I would hire someone that's good at sales. I would hire someone that's good at marketing and delegate that way. So when you hear Google saying, we're going to create our own chips, when you're not a chip manufacturing business, that is something that just doesn't make sense. Like why would you waste that effort? So I think a lot of people are taking that as a threat, and we're taking it as like just a loose threat and saying, you know what, we don't believe that you're going to be taking away that business from companies like Broadcom because you're not a chip manufacturing. Well, you're not a chip manufacturing yet, right? You don't have those capabilities. You're a search engine. That's what you do best. You partner with companies like Broadcom and say, all right, how can you help? How can we partner up and make this business work? So I think a lot of companies were worried about Google taking that business away from Qualcomm, Broadcom, but I think they realized that's actually not the case because that's just something that they don't do. So I came across this article on Wall Street Journal talking about Broadcom's AI business won't be easy to chip away, right? So it said, all right, Broadcom has firmly gotten in on the action of artificial intelligence chips, but the company is also learning that the volatility is the price of entry. The chip maker first made clear to investors in early March that need for generative AI capabilities was driving up demand for its networking chips used in data centers. That was nearly 3 months before NVIDIA issued its own blowout sales forecast and turned it into the first chip maker in the market value exceeded $1 trillion. Broadcom isn't at that valuation yet, but its stock price has surged 38% since those fiscal first quarter results in March and 22% since NVIDIA report in late May, with both performances well exceeding the PHLX semiconductor index performance over time. So you can see that because, like I said, demand is so high for artificial intelligence. Everybody's trying to be the first in this artificial intelligence space, that the demand for these chips have gone up. So companies like Broadcom obviously are going to benefit from that, since they're semiconductor manufacturing companies. So they're going to benefit from that, and obviously there's going to be a lot of volatility because you have, like I said, Google threatening and saying, all right, the cost of these chips are too high, you need to drive the prices down or something like that, or we're going to try to bring it in-house. But like I said, that's a false threat, and I don't think they're too worried about that. So it says, but this run has also made Broadcom more vulnerable to perceived weak points in the armor. The company's fiscal third quarter report late last month sent the stock down more than 5% after projected revenue for the fiscal fourth quarter was merely in line with Wall Street's forecast, following 12 consecutive quarters of beating analyst targets, according to FactSet. Then came the report last week that the information that said Google was planning to ditch Broadcom as a supplier for custom data center chips called tensor processing units, or TPUs, because the frustration that Broadcom's high prices that reported knocked nearly 3% off Broadcom's share price the next day. So like I said, Broadcom's prices were a little bit too high. Google said, you know what, we don't like that. Their price is too high. We're going to probably bring this in-house. And then obviously that dropped Broadcom's stock 3%, right, the next day. So it says the stock clawed back those losses on Friday after several analysts cast serious doubt on the idea that Google could easily pull its business from the chip maker. Google, for its part, said that we see no change in our engagement with Broadcom, even though it noted that it was talking with multiple other suppliers for the long term. So, like I said, it's not gonna take away their business yet, right? They may be talking to other suppliers, or maybe in the future they might want to try to bring the chip making in-house, but that's probably not gonna happen obviously for the next 5, maybe 10 years, if that happens at all. So it says Stacy Rasgun of Bernstein estimates that Broadcom's compute offload business, which primarily serves Google, will generate about $3 billion in revenue for Broadcom's fiscal year ending in October, which could present a gain of about 50% from the prior year. Such growth is an important offset to other areas of Broadcom's business that are feeling the weight of the broader chip downturn. Analysts expect the company's total semiconductor revenue to rise only 9% this year. So it says Broadcom is indeed known for driving a hard bargain on prices. Raskin estimates a Google business commands gross margins in the 75% range, but that still doesn't make it easy to replace. Like Tim McCurry of UBS noted Friday that the TPU chips of the Broadcom supplies Google also included proprietary technology involved in packaging, memory, connective chips, and optics. This is very sticky and hard for Google to replicate internally. Like I said, Google is a search engine. They can't just be like, all right, we're going to turn into a chip manufacturing company, right? It's not what you do, even though they have the money. But it just doesn't make sense, because why would you become something that you're not? Why don't you just take that, take those services to someone that actually is good at doing that, pay them, and create and do your business that way. So, but everything comes down to money, right? So analysts agree that Google could still bring in other chip vendors for the fastest of its TPU needs, and the substantial results could also drive Google to bring more of its chip design work in-house. Parent company Alphabet's net cash balance of nearly $136 billion is the highest in tech, and even more than twice of that of Apple. But the iPhone maker's recent stumbles in developing its own modern chips stand a good reminder that even the deepest pocket tech giants easily pull off their own designs of complex chips. So Apple tried this, all right, and of course Apple got money, but they failed at it. They didn't do it. They tried to bring the chip making in-house, and they didn't succeed at that. So it's not something that's easy to replicate. If you're a business that you work on obviously what you're good at. Obviously you try to develop and try to bring different aspects to your business. But if you're trying to do something in terms of like making chips, if that's not something you do, then you just delegate that to somebody else and work with them. So it says Broadcom has a strong history of retaining business that it wants to keep, even when customers push back on prices. The company once seemed to float the idea of selling its radio frequency chips that mainly supplies to Apple, its largest customer, but the two locked in a new supply deal earlier this year, just months after the reports that Apple was considering bringing the work in-house. So Apple was talking all that nonsense, and they just cut a deal with their new supplier. So I think it's just a negotiating tactic. Like, all right, the prices are pretty high. We need you to bring those prices down, or we're gonna bring find alternatives. I think it's just a negotiating tactic, clearly, because Apple obviously worked out a deal. So it says overall we have little doubt that each generation of products somewhat intense price negotiations occur between Broadcom and its heavily concentrated customer base. Ross Seymour Deutsche Bank wrote in a note Friday. He added, however, that Broadcom has succeeded in maintaining these relationships, and we would expect that conclusion to be most probable outcome in this instance as well. Investors shouldn't count Broadcom out of Google just yet. So like I said, Google doesn't seem to be letting go of Broadcom anytime soon. Maybe 5-10 years from now, they might find an alternative, or they might find a way to build those chips themselves. But as of now, they're not going to obviously risk their business and try to do something they're just not at the moment capable of doing. So in the future, who knows? That may change, but as of now, if you're someone that's investing in Broadcom, I don't think you have to worry anytime soon. So that's all I got for you guys today. If you got any comments or questions, make sure to leave it down below. Hit the like button and share. And if you haven't done so already, make sure to subscribe. Right? So you guys take care and have a good one. Later.